Good Sunday morning, traders. This is Sam the Trader Geek with your Sunday, October 26, 2025 market review and preview video. Hope you're having a great weekend, and we're going to take a look through some of the results over the last day, week, month, and year to date before we dig in some of the charts. Looking at major markets for just last Friday. So everything was up except, of course, the VIX and gold dropping just about 31 basis points. Leading the way were the microcaps, 1.92%, and then the small caps at 1.22%. Qs, tech heavy, up 1% a little bit, and then DIA same. And the SPY was up 0.82%, not even 1%. But overall, pretty bullish day. Even bonds gaining a little ground on a bullish day with the dollar pretty much flat after that better than expected CPI report. For the week, we had Bitcoin looking like it was the leader, up about 4%, microcaps 3.41%, small caps 2.5%, Mag 7 2.38%. At the bottom, giving up a lot of the volatility, about 1/5 of it, 21.22%. The VIX and gold losing 2.91%. Seemed like a lot more. It felt, or at least it felt like it was, because we haven't had that big of a drop in a long time. Aggregate bonds just about flat, and just SPY on the week was kind of the weakest of all the major indices. And if you want to call 2% up week, but it wasn't. Month to date, we have one more trading week this week left in the month, and kind of reversing its position from the last week. Bitcoin down 3.5%. High yield bonds losing about 14 basis points. VIX just pretty much flat on the month, if you can believe that. It was just going back and forth, but the microcaps still in the lead, 6.28%, with gold still up 6.25% on the month, and small caps up 3%, and the Qs up 2.8%. So even the 20-year bonds, the TLT, were up 2.35%. And since this is the first month of the quarter, the month and the quarter are one and the same. Year-to-date basis, gold by a long shot leading everything here, 56.15%, over 50% for gold. Microcaps still in the lead year to date, up 21.5%. Magnificent 7 up 21%, and the Qs up 20%. At the bottom, VIX losing about 6%, and the dollar losing about 5%. So everything pretty much in the green in terms of equities and gold and Bitcoin. So so far so good this year. If we take a look at the sectors on Friday, and we can see that technology led the way, followed by utilities, then financials. Metals and mining were up 1%. At the bottom of the list, energy giving back a good chunk of the gains of the week. I mean, just can't seem to get into gear, losing 1%. But it is only one day, and had a couple strong days. XLB materials can't seem to get out of their own way either, down 0.4%. Retailer stocks down 0.4%. And I'm starting to wonder on the retail, how good of a holiday season is this going to be if we can't get the retail stocks to start performing. But again, this is only one day. XLP 0.33%. Taking a look at the week, if I can get the right tab, there we go. We have technology up 3%. Energy still, despite Friday's weakness, was up 2.5%. And industrials starting to get in gear, up 2%. And bottom of the list there, metals and mining on the pullback in gold, and telecommunication stocks. It looked like AT&T and Verizon and T-Mobile were on their way to new highs, and at least they were up to their 52-week highs, and then just the bottom fell out a couple of weeks ago on these telecom stocks. XLP still on the week losing 80 basis points. We're not going to get that good a performance from these staple stocks, not as long as risk is on for now. IYT transports up down 0.5%, and utilities losing about 20 basis points. On a monthly and quarterly basis, metals and mining still far and above the leader. Healthcare up about 5%, as are utilities, and XLK, the technology. At the bottom, communication sector, which includes the likes of Google and Disney and Meta. So seeing a little bit of weakness so far this month. I haven't seen much strength from Meta at all, but I have a feeling it's going to play catch up soon. Retailer stocks down 1.61 and transports down 1.59%. Sectors on a year-to-date basis, metals and mining, again, far and away the leader at up 76%. Then technology, just about 1/3 of the XME. Utilities up 20%, as are the telecommunication stocks, still up 20.5%, with communications itself up 19%. Bringing up the rear are the consumer staple stocks, the likes of Procter & Gamble, Clorox, Walmart, all that. Although I think Walmart is a bright shining star in those staple stocks. Energy barely up 3%, transports 4.5%, and then real estate up about 5%. Taking a look at the Mag 7 for last week, Tesla lost a little bit of ground on earnings. Nvidia and Microsoft up 1%. Amazon finally bouncing back, but I mean, this thing is nowhere near all-time highs, as are a lot of the Mag 7s are. Apple gaining 4%, making new all-time highs. Meta finally grabbing about 3%, but still below its all-time high. And Google really shining out there, up 2.65%. On a quarterly basis and monthly basis, Google 7%, Apple 3%, Amazon 2%, but Tesla losing about 2.5%, with Nvidia so far this month is pretty much flat. Year-to-date basis, everything in the green, with Nvidia still leading, but not by much anymore compared to Google. Everybody counted Google out and was the loser in the AI game. But look at how much and how far it's come. And it just goes to show you, Google's not just going to roll over and die. They're going to protect their turf like crazy. And they are going to compete with the big boys, because they are one of the big boys. Meta up 26% and Microsoft 24%. But bottom three, Tesla, Apple, and Amazon, all in the single digits. And it's interesting to see the bifurcation. Those in the double digits are pretty much leaving the last three in the dust so far. So kind of a review there. I don't need to get into industries. I'll do that on the month end next week. So let's take a look at the charts and see what we're seeing. Of course, what we saw on Friday was a new all-time high, hitting the 68.07 and just pulling slightly back in the afternoon. We're looking at the daily chart, the weekly chart, and the monthly chart. And as usual, anything that's going to happen on the monthly chart happens on the weekly chart first, and then on the daily chart. So if you're a top-down trader like I am, it's always good to look at, at all the time frames. And I look at these every single night before the trading day, and sometimes in the morning, just to refresh my memory that, there's nothing in these charts that say short or be bearish. And if you are, then you need to rethink it. It's either long or neutral, because there's nothing more bullish than new all-time high. So I can't count the number of people that I heard from and read from who said that it's going to be a long time after this October 10th red bar before we hit new all-time highs. Well, guess what? It was 1, 2, 3, 4, 5, 6, 7, 8, 9. 10 sessions, exactly 2 weeks for it to recover and take out that bar. So amazing market. Nothing can hold it back. MACD on the daily finally flipped positive again. We're getting a little bit a green on the histogram. Still not overbought on a daily basis. We're at the 62 RSI level versus 70. You look at the weekly, beautiful uptrend. We stopped one time framing with this one bar here, and we never took out the low of that bar the following week. And make sure I'm not lying. Yeah, we came within 5 points, and here we are starting to one time frame again to the upside on the weekly. And you can see here on this chart that here's the upper edge of this week's options implied, or the lower edge of the options implied expected move, sorry, right down here at 66.80. And then the upper edge is about 69.03. So that basically gives us about 110 points of an implied move. I'll show you that in a minute. But beautiful weekly chart, above all the major moving averages. We've got a bullish chandelier stop, bullish PSR, same as the daily, all green all around. So nothing bearish about this chart whatsoever. Come over here to the monthly, MACD solidly positive. Still overbought on the monthly, and overbought usually stays overbought. And we are going for 1, 2, 3, 4, 5, count them, 6 months up in a row with only 5 trading days left in the month. I don't see how that's going to change. We would have to really have some bad news to take out the 65.50 low from October 10th. And that's basically what, almost 200 points, 190 points down. And that's not even in the options implied expected move for the week. So bullish all around here, all time frames. Doesn't mean you can't get a pullback. Doesn't mean that we can't go sideways and consolidate and chop around. But you're either long or you're neutral. Here's the NASDAQ. Chandelier just flipped to bullish PSAR. This is a volatility stop way above here, new all-time high. We hit the 25.4 level, closed within 50 points of it on Friday. MACD flipped back positive, and RSI at the 62, not quite overbought. Never got negative on the MACD on the weekly. We are back to overbought on a RSI weekly, but you know, again, we had one day, Wednesday, or 2 weeks ago, there's that red candle. Never really, besides this week, we're resuming our uptrend and one time framing to the upside. One time framing meaning that no low of one bar took out the low of a prior bar. And this one was 24.07. 24.207 for the week of the 10th. And then this one, the low got to 24.256. So we didn't even get within 50 points of that particular low. And here we are, new all-time high. Same with the monthly, still overbought, just like the SPX. And we've got the MACD solidly positive. And this one, let's see, I guess 19,278 here. Yeah, I mean, 1, 2, 3, 4, 5. We're going for 7 up months in a row on the NASDAQ. So you want to short that, be my guest. But if you are, you probably hit your money. RUT, right? Russell 2000, back to a bullish chandelier, bullish PSAR. And yeah, it looks very similar to the others. Although you can see more of a topping tail on Friday for the RUT. And again, I just wonder when RUT is going to carry the baton for this market, especially in light of declining interest rates. But we did not make a new all-time high last week on the RUT. And MACD has not flipped positive, so it's kind of the whipping boy of the market as far as indices go. But you know, the microcaps, maybe I'll show those next. are looking good, but here we have not overbought, not even into the 60s on the daily. MACD solidly positive on the weekly time frame, and then you've got 67 RSI on the weekly. We haven't taken out this topping tail from the prior week and made an all-time high, but I guess you could say that the small caps did make an all-time high before the other indices did. So I guess I should cut it some slack. We can see here that a nice positive candle. You can see here where the options implied expected moves are for this coming week. And then on the monthly, 1, 2, 3, 4, 5, 6 months, solidly positive. MACD is positive, not overbought on the monthly. So of all the three, the small caps have the most to run in terms of playing catch up. And if they do, boy, we're almost guaranteed that the SPX is going to do well and get us to the 7,000 to 7,200 range by year end. And I don't think that's outside of the realm of possibility. I thought I'd throw up the microcaps, the IWC, as the proxy for the microcaps. They have not made a new all-time high, but pretty close, within a few bucks. But they look very similar to the small caps, and they have not flipped to a bullish MACD here. They look similar to the small caps on the MACD on the weekly, but look how much more overbought here than the small caps here, solidly in the red, getting closer to overbought on the monthly. And this one basically, let's see, 110.91, within a few pennies, but 1, 2, 3, 4, 5, 6 months in a row up on the micro cap. So these are doing pretty well, and quite frankly, better than the small caps. Taking a look at the VIX, and here we are. We've got the daily VIX, and after this big day where we hit almost 29 on the pre-market on the 17th of October, it's been a straight line down, except we had a little spike there on Wednesday, but came right back down, and here we are. We're at the 1637 level. We're just sitting right on the 50-day for the VIX, but nothing here says the market is bearish, and a declining VIX obviously means a climbing market. If we take a look at the VVIX, which is the volatility of the volatility, now notice that by the end of the day Friday, this thing kind of recovered, and while that's not a worrisome sign, it is telling me that some institutions saw right to hedge into the weekend. And so we hit a low of about 95 and we closed at a 98, which is under the kind of the 100 level of the VVIX of demarcation. I think like over 100, it starts to be concerning. Over 110, then things are starting to rock to the downside. Notice back on the 10th and the 17th, we got as high as 137, and I don't think we hit that. Even on the 10th, when we had that bad day, yeah, we only got as high as 118. So this is kind of telling me that there is still some hedging going on. A couple other things that I noticed was that the longer dated puts that I was short on Friday really did not deflate as much as I would have expected. Now, what did we say? The VIX was down. I think a swim does not have that percentage anymore. So let's see what it was. So on Thursday, well, I have it right here. So if I go back to, so the VIX lost about 5.38%. But when I look at a lot of the puts that I'm short into December and November and January, what was odd is that they weren't losing as much value as I would have expected for the kind of day that we were having. And that tells me that they were keeping volatility bid in the further expiration. So I don't know what that means or if it means anything at all, but it was something that was notable for me, that they were just not squeezing the juice out of these out of the money puts as much as I would have expected. So we closed at 1637. Let's call it 16. And what I like to do, as you know, is go out $1 to see what the calls and puts are relatively pricing at. And if you look at the 17, you can see that the calls are pricing $1 out of the money at about $2.31, $2.30. You go to the 15s and they're basically call it 8 cents. So quite a bit of advantage here to the bears. So if you're bearish on the market, you're buying calls, and the calls are really a lot more expensive than if you were bearish on the VIX or bullish on the market. And in this case, these are dirt cheap if you want to buy the puts, but something tells me, and you know, when I see this kind of stuff where no bid by $20, no bid by $50, and I think this is ridiculous by the exchanges. This is, I am looking at, right? Yeah, I'm looking at the monthly expiration coming up in 23 days. And I think it's ridiculous that they can't get these straight at the exchanges where just slightly in the money. Why is there no bid here? That doesn't make sense at all. Any case, that's my little rant on there. If we take a look at the volatility futures and our next expiration of the volatility futures, and you know, quite honestly, the volatility futures drive the prices of the VIX options quite a bit. This is the next VIX expiration coming up in 23 days, and the VIX contract expires on the morning of the Wednesday, the day after. So 1860, you go out 52 days, it's 1932, then 20, 21. So you're seeing normal contango in the VIX options, which means the farther you go out, the further you would expect risk and to be higher. And that's exactly the case. So this configuration tells me that there's not a lot of immediate fear, although we did see in the option prices that we could have a little dipsy doodle in the market one of these days, given the pricing of the VIX calls, but that could be just nothing, and we'll have to see. But this is the last trading week of October. We'll see what kind of positioning happens, but I think the race is on for performance until year end, and everybody who's been waiting for a seasonal dip has not seen it, and therefore, are they going to jump in and buy with both hands or both feet, whatever you want to call it? But taking a look at the SPX and the expected move, remember last week the options implied expected move was about 135 points. I'm sorry. This week it's 111, and that makes sense given the volatility is down on the week. The week before it was 197, but make no mistake, this is still a big move, 111 points, give or take. And, you know, we've seen days with movement of 111 points in one day alone. So keep that in mind. Still a buyer of options, not a seller, at least of short-term options. I don't want to get run over. You shouldn't want to either. And given that the volatility is coming a little bit, you're not going to suffer a lot of collapse. But I'm still tending towards buying spreads rather than individual options. It depends on how far out and what I'm buying them in and what the IV percentile. Right now, the IV percentile is really low on the SPX 7 percentile. So you could buy the call and not worry too much about decay, but that's up to you. Speaking of the expected moves, this is a heavy week of earnings, probably the busiest week that we have coming up, and a lot of the Mag 7 reporting. I won't bore you with all the names. You can see them here. You can pause the video and check them out. But you know that Amazon and Apple and Meta and do we have Google this week? It's not popping out at me, but you can see, you know, typical Friday, Chevron and Exxon, AbbVie. We've got Visa, and look at that, Bed Bath and Beyond is back, right? Rising from the dead. So a lot of big names, and then we have more earnings the following week. But we have the bulk of the Mag 7 reporting this week. And not only that, but we have something you might have heard of coming up on Wednesday. We have the Fed funds FOMC statement and Mr. Powell's dog and pony show at 2:30. So we'll see if we get these pending home sales numbers. Maybe that's not from the government, so it'll come out. Richmond Fed at 10 o'clock Tuesday. Nothing tomorrow. And then advanced GDP, will we get that on Thursday? With the government shut down, no jobs number. And, you know, tentatively scheduled to get core PCE on Friday and the employment cost index, but who knows with the government shutdown if that will come out. I mean, the CPI came out because they had to get the numbers for the Social Security CPI adjustment. So they came back to work to do that and work on this one. So we'll see what happens. But overall, guys, nothing here that says there's anything wrong about this market. There's a couple of feathers in the bear's camp as far as volatility structures and volatility pricing, but every study that I looked at over this weekend so far says that we should have a nice rally into year end. Obviously, anything can happen, but again, you're either long or you're neutral into this market. There's no reason to be bearish, and you know, normal risk management applies. My name is Trader Geek Sam. You can find me on Twitter at Trader Geek. Give me a follow. Otherwise, I appreciate you watching and listening. If you have any comments for me, please put them into the comments section, and I will catch you on the next one next week. Take care. Bye-bye.